So students are saying, ma'am, ऑफिस से छुट्टी नहीं मिलेगी, हमें बॉस छुट्टी नहीं देंगे फ्राइडे सैटरडे के लिए, तो प्लीज आप बात करना। तो आई एश्योर देम कि मैंने जिससे भी बात होगी, आई विल रिक्वेस्ट ऑल द एम्प्लॉयर to give a holiday for Friday and Saturday to join the national conference of CA students. So please keep my request and give the holiday to all the CA articles to take part in national conference. Thank you. Thank you.
Great. Thank you very much. So therefore, in short, 15, 16, I request all the members to join us in this world-class regional conference that we are planning. Fully tech-loaded event. And at the same time, students would be there in Varanium. That is our national conference for students. And I'm sure they'll have a great time. I request Ritika to please quickly introduce Sajjan ji so that we can start up the session. Thank you.
Yes. CA Sajjan Kanodia is a fellow member of ICAI. He is qualified in 1993 and has secured All India 44th rank in CA intermediate exams. He has 30 years of professional experience in the field of indirect taxation and special assignments. He is a qualified FAFD, which is Forensic Audit and Fraud Detection with ICAI. He is also a panel peer reviewer with ICAI and carried peer review of many large CA firms. He is a partner with Creston SGCO, which is a network member of Creston International, being 12th largest global accounting firm. He is a past convener of JB Nagar CP Study Circle, being one of the largest circle with 1700 plus membership strength. He is a regular visiting faculty on indirect tax and has spoken on various related topics at different platforms. So over to you, CA Sajjan Kanodia, sir. Let us begin this wonderful session and give our best in the upcoming GSTR 9 due date.
Thank you. Thank you, Chairman. Whether I'm audible? Yes. Thank you, Chairman, for giving me the opportunity. And under your leadership, the WRC is doing excellent working, and you are taking the working of WRC to new heights. Lot of appreciation words we keep on listening for you and the young team you have. And regional conference is designed in such a way with the technology that anyone who joins feel so happy and so good. I have joined many times in my career regional conference, and always we find it worth. And that is the time when we meet with our fellow members and we enjoy ourselves. This is not only relieve us from the workload, but also we gain the experience, good experience from the seasoned faculties as well as the good networking opportunities. So my request is also to everyone to please join for the regional conference. Ketan bhai, thank you for nice words, and Pinky madam, thanks, and Ritika, thanks for nice introduction. Now, without taking much time, we will start with the today's subject, GSTR 9 and 9C. Friends, GSTR 9 and 9C is, we have already filed for 17, 18 to 21, 22. 5 years we already filed GSTR 9 and 9C. So we all know that what are the processes, what are the difficulties we face in GSTR 9, 9C. And whether it is a simple arithmetic exercise, whether it is a reconciliation matter, whether it is a simple form, or there are some other issues which we need to touch upon, particularly from the perspective of department, GST department, because in last 2 years we have experienced about GST departmental notices as well as GST departmental audits. State department in Maharashtra is doing audit for 1 year at one point of time, and generally central department is doing for 3 years, say 17, 18 to 19, 20. State has done for 17, 18, then 18, 19. Now they have issued the notices for 19, 20 also. So many of us has experienced when we receive the notice for the audit, and when the audit is going on, many of the questions are related to reporting in GSTR 9 and 9C. So GSTR 9 and 9C, how the department is taking, what is their perspective, how they are raising the liability, how they are raising the issues in GSTR 9 and 9C. Now, before we go on the individual topics of the GSTR 9 and 9C, I would like to discuss about the scrutiny notices issued by the state and central department. State department particularly issuing a series of notices in ASMT 10, then followed by GSTR DRC 01 and DRC 01. You all must have noticed and experienced that the parameters mentioned in the ASMT 10 notice are majority related to GSTR 9. They are linking the figures with GSTR 9. So GSTR 9 becomes highly important when we are reporting in departmental notices. Today we will discuss that the figures reported in GSTR 9, whether it raises any liability on us, whether we can take any credit based on GSTR 9, what is the importance of GSTR 9C, all these issues we will discuss. And what should be the process followed for GSTR 9 and 9C. So process I will discuss in brief, but I will suggest the members that generally what happens that when we are preparing GSTR 9 and 9C, we leave most of the work to the responsibility of our juniors. And in that process, sometime some error remains in GSTR 9 or 9C. So it is better that whatever the work is done by juniors, we should review. And we will discuss close by close that what are the issues in GSTR 9, how we simplified it should be. Because figure work is there when we see from the apparently Form 9 and 9C as Ketan Bhai has told, it looks very simple. But when we prepare, it looks complex. And when we do the backup working, Excel files and all these, it looks complex. And in that process, somewhere some tables become complex and confusing to the team. We should use the handbook issued by ICAI on GSTR 99C. That is excellent. And once anyone goes through that handbook, it clarifies everything. All the tables, all processes, what should be our approach and all these. So I would like to recommend to the members that we should read this handbook. Now, to my presentation, Ritika, can I start the presentation here? Who will start my presentation here?
Yes, you can.
Okay. Now you are hearing okay, but my presentation PPT. Okay. So let us go with GSTR 9. GSTR 9.
Your PPT is not visible.
Yeah, so that is what I am asking. So whether I have the admin rights?
Yeah, you have. You should.
Okay. So how to say it? Okay. So now my screen is visible?
Yes. Do in PPT.
Okay. PPT is visible. Okay. So GSTR 9 has 6 tables, 6 parts. First is the basic information, then details about outward supplies, input tax credit, taxes paid details, previous year transaction declared in current year. This is most important. And the other information. Other informations are now optional. So anyone who want to fill up, okay, it is personal choice. Otherwise, we can skip this information also. GSTR 9C. GSTR 9C have 5 parts. Basic details, reconciliation of turnover declared in audited annual financial statement with turnover, reconciliation of taxes paid, reconciliation of input tax credit, and auditor's recommendation. Since the CBIC has withdrawn GST audit, so part 5 is not applicable now. Now, who is liable to file GSTR 9 and 9C? Anyone who has turnover of more than 2 crore is liable, other than these persons. RTP having the turnover of up to 2 crore, input tax distributors, person paying tax under section 5152, casual taxable person, non-resident taxable person is liable to file GSTR 9, and for threshold for GSTR 9C is 5 crore rupees. Now, let us see the due dates, how the law has evolved till now. 1718 due date was 31st October, but it was extended 4-5 times. Ultimately, the last date was 5th February 2020. So there was extension of 1 year, 1 month. Then 1819, it was also extended because 1718 was extended, but in next year the extension was for 1 year. In third year, extension was 3 months. Then 2021 extension was 2 months. 21-22 no extension, and 22-23 till now there is no extension. So we can say that based on the CBIC decisions, the GST law is stabilized and GSTR 9/9C can be filed easily within due date. So we all should make efforts to file before due date, and let us do not make the wait for last date. Now, late filing fee. This is important. GSTR 9/9C is an annual return to be filed. So originally there was late fee of 200 rupees per day, subject to maximum of 0.5% of annual turnover. This was too high. Suppose someone could not file the return within due date. So it is an annual return. It is not any return through which you can avail an ITC, you can declare your output tax liability transaction wise. So this is an annual return wherein you can rectify whatever the mistakes has been happened during the year. So 200 rupees per day was there. This year, the CBIC has brought one amnesty scheme for up to 2021, wherein maximum fees is 20,000. This amnesty was available up to 31st August. So anyone who could not file the return within due date could have availed the benefit of this amnesty scheme and file his or returns. Now, for 22-23, the late filing fees is reduced 50 rupees per day, subject to maximum of 0.02% of turnover. If the turnover is between 2 crore to 5 crore, and 100 rupees if the turnover is above 5 crore, and maximum of 0.02%. So they have rationalized the late filing fees and reduced it. Some updates on GSTR 9/9C by CBIC. So the exemption of 2 crore is continued through notification number 32 by 2023. And there are some amendments in GSTR 9/9C through notification number 38 dated 4th August 2023, wherein RTP has option to report figures separately in table 5. This is very important. Exempt supplies and table 5E, nil rated supplies, or report consolidated figures in table 5D under exempt supply. So if you want to separately report exempt supplies and nil rated supplies, okay, use report separately. Or if you want to put the consolidated figures of exempt supplies and nil rated supplies, you can put the consolidated figures in table 5D. But in my opinion, we should separately report these figures, because for the purpose of Rule 42, nil rated supplies is not considered, and exempt supplies, out of exempt supplies, except interest, all other supplies are being considered. So at the time of GST audit, you will get the better clarity and the assistance from the department. Then RTP has the option to report figures in table 5H to 5K. GSTR 9C entry B1 inserted in table 9 being 6%. So earlier the rate of 6% was not there in GSTR 9C. 5%, 12% and other rates were there. So 6% rate is also inserted. So corresponding there is a insertion in table 11 and part 5. Now let us start. So these were the basic details which we have discussed, that what is the who is liable to file GSTR 99C, what is the past experience in last 5-6 years, and late fees and all these. Now, when we prepare GSTR 99C, what are the important aspects while preparing GSTR 9? What are the important aspects while preparing reconciliation in GSTR 9C? Whether we should upload some explanatory notes along with GSTR 9C. With GSTR 9, we cannot upload any attachment. The form has to be online filled up. And there also the copy paste is not allowed. You have to manually enter the data. So there is a chance of clerical mistake. But as long as GSTR 9C is concerned, you can prepare in any software and you can upload the GSTR 9C JSON file. Along with that, you can upload other files also. So should we upload some explanatory notes? Because during the course of discussion, we will see that in GSTR 9C, there are some understanding gaps. So to address those understanding gaps, what we think as a registered taxable person or as a consultant of the registered taxable person, and what the department think. So to address that gap, we can upload some attachment through notes. So that can minimize the gap and minimize the issue of notices. Then financial impact consequent to findings in GSTR 99C. In GSTR 99C, suppose we rectify the errors which have been done during the year in GSTR 1, GSTR 3B, or any other errors. So what will be the financial impact and how it has to be addressed? Then importance of GSTR 99C in departmental audit. I have discussed initially that in departmental audit, there are a lot of reference based on GSTR 99C, and some officers are raising demands or creating the points in initial notices, and they are taking up to so-cause notice that since there is this figure is mentioned in GSTR 9, so based on this you are liable to pay so much liability. Then let us see that GSTR 99C is newly introduced in GST era, vis-a-vis the VAT audit report. I will discuss in short about this, whether this form is self-sufficient or whether it is at par at VAT audit report, or can we expect in near future CBIC will come with new formats. Then GSTR 99C vis-a-vis tax audit report. So tax audit report, though not a matter related to indirect taxation, but in direct tax, it is important point, wherein a chartered accountant reports on various aspects of transactions during the year by the company or by any entity. See, I will take these last 2 points first. So VAT audit report, we all have seen, is a more comprehensive report than 99C. VAT audit report was having so many annexures based on which certain things have been already done by the department, and only the limited issues were being raised during departmental scrutiny earlier. But now, since GSTR 99C is only an arithmetic exercise without much clarity, so department is making their own opinions and they are picking up the cases. Majority of the cases they are picking up for the scrutiny, and they are picking up the cases for audit. So there is no annexure in the GSTR 99C, and only the limited fields are there, wherein also for certain fields, if there is no explanatory notes you can give, only you can give the attachments in GSTR 9C. So to my mind, these forms need revision. Let us see when the department will. Tax audit report is much lengthy and have better clarity about the individual points. There is a detailed revision in Form 3CD over a period of time, but that has been number of years. So we can expect in indirect tax also that in future the GST audit can be introduced again, and there can be detailed forms for GSTR 9 and 9C. Now, let us take one by one points, important aspects in GSTR 9 and 9C. So, coordinators, whether we would like to take any questions in between or we will discuss at the end.
So we'll keep the stage open at the end for all the questions and answers.
Okay, fine. So GSTR 9, we all know that first is the outward supplies. So I have compiled this presentation in a way that all tables of GSTR 9 and 9C is put together. So related to outward supply, in GSTR 9, there are 4 tables. Table number 4 is detail of advance, inward and outward supplies made during the financial year on which tax is payable. So table 4 is all category of supplies on which tax is payable, means we have collected the tax, whether it is advance, whether it is inward supplies means RCM, or whether it is outward supplies. Outward supplies are different categories: B2B, B2C, exports, deemed export. So that we will discuss individual parawise. So table 4 is for reporting of those category of supplies where tax has been collected. Table 5 is details of outward supplies made during the financial year on which tax is not payable. So there is a clear-cut distinction between these two tables. Table 4 is where the tax is payable, and table 5 is where the tax is not payable. Table 10 is supplies tax declared through amendment, means increase in your output tax liability, net of debit notes, okay. And table 11 is supplies tax reduced through amendments, means decrease in output tax liability. These two tables are highly important, and we should have a very clarity that what category of figures are to be reported here and in which situations we need to report the figures here, because table 10 is the main point nowadays based on which the State Department is issuing a lot of notices. Corresponding tables in GSTR 9C is reconciliation of gross turnover, reasons for unreconciled difference in annual gross turnover, table 7, reconciliation of the taxable turnover and the reason there, table 8. Now let us see table 4. As we have discussed that this table is related to the all category of supplies where we have collected the tax. So what should be the source of data in this table? First of all, we have experienced that this table, when we log in, the figures are auto-populated into this table. Anyone who log in, figures are auto-populated into this table. So what is the source of those figures? To my mind, the source is GSTR 1. Whatever the figures we have reported during the year in GSTR 1 are auto-populated here. Now, what should we do in table 4? Okay, so B2B supplies is the net of credit note, debit notes, supplies made to registered persons, zero dated supplies, exports made, supplies to SEZ, deemed export, and advance on which tax has been paid but invoice is not raised, and the RC. So based on our books of accounts and whatever we have reported in GSTR 1, whether the figures are matching. If the figures are not matching, then we have to first decide whether any tax liability has been skipped from reporting or whether any tax liability is reported in excess of books of accounts. So these are the two situations. Then table I, J, K, and L are related to debit note, credit notes. This is still optional, but it is better to report the figures into these tables. So it is clear that the figures in table 4 is to be reported auto-populated, and we have to compare these figures with our books of accounts. If there is any difference, first we have to note down the difference. What is the difference? Okay. Now let us see table 5. Zero rated supplies export without payment of tax, SEZ without payment of tax, and tax is to be paid under reverse charge by the recipient. Suppose the registered taxable person is having the advocate services, so tax is to be paid by the recipient. Then exempt, nil rated and non-GST supplies. So exempt and nil rated, we have discussed that you can report these two figures cumulatively in exempted supplies, but nil rated is those figures where the supply on that the tax rate is made nil. It is a taxable supply, but tax rate is made nil. And non-GST supplies are those supplies where there is no supply, only either it is out of purview of GST or it is a no supply. So in table 5, no tax is payable, and these fields are optional. H2K about debit note, credit note, and based on that, in table 5N, you get the figure of total turnover, that is without RCM. RCM is just a reporting, or see, we are paying the tax and taking the input tax credit. So as such, it is not an output supply, but it is reportable in the GSTR in this table. So in 5N, the net figures are coming. So here also we need to compare the figures with our books of accounts, and if we find any difference, then we will first identify what is the difference. Now, once we find the difference, what is to do? Let us see first table 10 and 11. Table 10 is supplies tax declared through amendment. Now, through amendment means what? In next year, see, first you see the heading, particulars of the transactions for the financial year declared in the return of next financial year till the specified date. The specified date, earlier it was up to return for September. For last 2 years, it is extended to 30th November. So up to 30th November, whatever the supplies which were declared in the return during the year, or it is revised upward or downward, is to be reported here. The point is that only the supplies which has been declared in last financial year and which has been amended in the return for next year, through which it is reduced or it is increased, is to be declared here. Many fellow members make the mistake that they declare some other figures here, and based on that the liability comes. Now let us see the two scenarios as I discussed, that based on the preparation of these 4 tables, 4, 5, 10 and 11, there is an increase in our tax liability. So if there is an increase in our tax liability, we will modify the figures in table 4. If there is an increase in tax liability, we will modify the figures in table 4 and pay the differential tax liability through DRC 03 and report in table 14. If there is decrease in tax liability, then we can claim the refund through RFD 01. And table 5 is, since there is no tax effect, so we can declare the figures here. And generally it happens because the figures are getting auto-populated from GSTR 1 3B, and certain supplies are not declared. So those supplies, when we make a reconciliation, when we go to the reconciliation, it has to be reported somewhere. So it is better to declare here. There will be no tax impact. Now, reconciliation statement. Reconciliation statement, it was introduced in 1718, and the same format is continuing. You have to take reconciliation is the turnover as per our audited financial statements, which the figures reported in GSTR 1. From GSTR 1, we are already rectifying whatever the mistakes or figures remained to be reported in table 4 and 5. So GSTR 9 becomes updated statement from GSTR 1, whatever remained to be reported in GSTR 1 or any mistake was there in GSTR 1. Now GSTR 9 figures are coming here and GST audited financial statement figures are there. So these are the adjustments we have to do: unbilled revenue, beginning of the financial year or end of the financial, unadjusted advances, deemed supply, credit note, trade discount. So all these are in the routine course. The most important is O, adjustment in turnover due to reasons not listed above. So here some figure comes. Now what are those figure comes? See, in GSTR 1, we have to report the figures where any transaction is taxable as per GST law. And the turnover in audited financial statement comes based on the accounting standard or Ind AS. So there are certain examples where some turnover is reported in GSTR 1, but it is not appearing in audited financial statements. Or there are some turnovers which are reported in audited financial statements, but it is not part of GSTR 1 and correspondingly GSTR 9. Now let us see a case of builder. In case of builder, in audited financial statement, the sales is recognized based on the accounting standards and mostly it is based on the percentage completion. So turnover is recognized based on the project completion stage. Whereas in GSTR 1, the figures are reported based on the demand raised on the customer. So demand is raised on the customer based on the milestones which are defined in the agreement with the customer. So during the year, the demand raised can be higher or lower than the figures recognized in the audited financial statement. So here the reconciliation entry comes, and that reconciliation entry will come into 5O. There can be another example of, say, sale of fixed assets. We have some fixed assets with us in books of accounts, which has been sold during the year. So if it is a second-hand fixed assets, the taxable value will be decided based on the notification issued by CBIC, and the tax thereon will be charged. But in audited profit and loss account, only if there is a profit, then it will come into the picture and it will be part of income. Otherwise, if there is a loss, it will go to the debit side of the balance sheet, P&L account. So here also there can be a reconciliation entry, which will be part of table 5O. In case of some individual business categories, say in case of stock broker, there are some charges which are charged to the customer in contract notes, and on that the GST is being collected. But those charges are set off against the charges debited by the stock exchange or some other entity. So the net amount is either claimed as a income or reported as income or claimed as an expense. So there can be these cases that some incomes reported in GSTR 1 are set off against income or expenses in the audited profit and loss account. So there also comes the reconciliation entry. Similarly, there are certain other transactions which has been set off against current liabilities or current assets. So in that case also the reconciliation comes. So table 5O is highly important for us. Now what should we do? When we go through this table 5O, we should give a detailed note on this along with the nature of transactions, because the department generally looks on this table, why the figures are coming here. All other are self-explanatory. Unbilled revenue at the beginning of the financial year. Your revenue has been raised, but billing is not done, so that figure will come. But in case of 5O, the detailed statement should be given. So it becomes clear to the department that what are the category of these transactions. In some cases, some consultants, they do not want to take some transactions here in table 5. So they take here in table in GSTR 9C 5O. But in my view, it is just a matter of representation. It do not make difference. Transaction is a transaction and it is a reconciliation of gross turnover. So once the gross turnover has been reconciled, then matter comes for the unreconciled figure. In my view, there should not be any unreconciled figure. If in any of your return, unreconciled turnover is coming, there is a possibility of some error. So better to reconcile that. And it is very simple. I will suggest that let us prepare a income reconciliation statement while preparing the templates for GSTR 990. In income reconciliation statement, it is very simple. Income as per audited profit and loss account, individual headwise. So that will be then summarized in 3 category of income: taxable income, exempt income, and non-GST. Exempt, again we can categorize into exempt and nil rated. Then a table as per GSTR 1, the income summary. Percentage while it will come. Generally, people do not report exempt turnover in GSTR 9. If we have reported, that is good. So exempt turnover will also come. Then reconciliation between these two figures. We are taking audited profit and loss account as a base, and then based on the GSTR 9, whatever the addition has to be done or whatever subtraction has to be done. Subtraction can be, say, in case of builder, the income is recognized based on the percentage completion basis. So that has to be reduced because income, whatever the demand we have raised during the year, that is already included in GSTR 1. So if we prepare this reconciliation statement, it would be easier to fill up table 5, 6, 7, and 8, all tables. So there will be no unreconciled turnover. Suppose in case it remains unreconciled turnover, then we have to give the reasons. Reason 1, 2, 3. Whatever the reasons are there, it should be given clearly. If we do not mention clear figures, then again it becomes a matter of doubt for the department. So once we reconcile the gross turnover, then let us come to the taxable turnover. Taxable turnover becomes very easy. We are taking up the gross turnover figures from table 5P or 5P above. And then we are reducing the non-taxable turnover on which the tax is not charged. Value of exempt, nil rated, non-GST supplies, no supply turnover. Then we are reducing zero rated supplies without payment of tax. Means exports wherein it is under LUT. Supplies on which tax is to be paid by the recipient or reverse charge basis. RCM basis पे recipient payment करेगा वो आ जाएगा. Then net turnover and turnover as per GSTR 9, it should be same and there should not be any difference. If there is a difference, then again we have to give the reason. Point is, suppose sometimes what happens that we are at the last stage, means 1 or 2 days are left or we are on the last day and we are facing these technical issues. I will recommend that we can delay 1 or 2 days the reconciliation statement, this filing of GSTR 990, but rather than filing with the lack of clarity. And we should have the backup working, because the backup working will be of highly importance when we face the departmental scrutiny or departmental audit later on. And it is part of our documentation to discharge the professional responsibility. So all these points are related to output supply. Finally, the view is that if there is an increase in output tax liability, let us pay by GSTR DRC 03. If there is decrease in output tax liability compared to books of accounts, then we can claim the refund in RFD 01. The next point is that some of the points based on which the department is raising the questions. Supplies declared through amendment in GSTR 9. The same point I have come here. This is the point. Table 10. So table 10, what figure we should report? Okay. So what the department says that now the last year one rule 88B has come, which says earlier to that in 2021, section 50 subsection 3, subsection 50 was amended about the interest, and we all know that interest is payable only on the cash component of the tax discharged. But in case of output tax liability, they have brought additional clarification through Rule 88B, which says that you will get the rebate, you will get the benefit if of having the accumulated balance in your electronic credit ledger if that particular transaction is declared in the relevant month GSTR 1. What do we mean by this? Say output tax liability B2B we have to declare invoice wise. B2C we have to declare a cumulative figure. Exports we have to declare invoice wise. Some invoice has been could not be reported in particular GSTR 1 and it is reported after 3 months. Though you was having the credit balance in your electronic credit ledger, still the interest is paid because you have discharged your output tax liability late, and this point has been clarified through Rule 88B. In what situation the interest is not payable? That particular invoice was declared in GSTR 1, but the tax liability for that for some of the invoice could not be discharged through GSTR 3B. Say as per GSTR 1, your output tax liability is 1 lakh rupees, but in 3B by mistake we have mentioned the figure of 90,000 rupees, and there is a continued balance in electronic credit ledger. After 3-4 months we found, or say after end of financial year we found that this mistake was there, and you are addressing this mistake later on. So the interest will not be payable to the extent the balance available in electronic credit ledger if the output tax liability is lesser in GSTR 3B. So what the department is saying that you have mentioned the figures in table 10. So for particular year, say the case is selected for 18-19. So 18-19, we have mentioned the figures in table 10. So department says that the 18-19 transaction you have discharged in 19-20. So you have to pay the interest for this. And that becomes true also because invoice of 18-19 is declared in GSTR 1 of 19-20. Whereas this table says only if the transaction was declared in our GSTR 1 3B return during 18-19 and that later on the transaction value has changed upward or downwards, then only we need to report here. So while reporting in table 10 and 11, we should be highly careful. Then the second point, what the department is saying, difference in output tax liability as per GSTR 1 vis-a-vis GSTR 3B, GSTR 9. Now, output tax liability in GSTR 1, whatever the mistake was there, that has been rectified in GSTR 9. And based on that, if there is an upward revision in output tax liability, that is paid through DRC 03. If it is downward revision, then we have claimed the refund. So basically, GSTR 1 and GSTR 9 should not be the criteria. The criteria should be output tax liability as per GSTR 3B and GSTR 9. If there is a lack of clarity, say in 3B we have declared the output tax liability of say 2 lakh rupees, and in GSTR 9 the liability is coming 2,05,000 rupees, and for 5,000 rupees we have not given the details of DRC 03, then department can raise this point. But this point is not clear to the department yet. Secondly, if we see the output tax liability, we are declaring the output tax liability first in GSTR 1 and then in GSTR 3B. So department should consider GSTR 1 and 3B either, or they should consider GSTR 3B and 9. considering 1 vis-a-vis 3B and 9 cumulatively is altogether not correct. This is one point which we should keep in mind while addressing this question, because this question is coming in most of the ASMT 10 notices. Then one point which is coming from the department is the difference in output tax liability as per GSTR 1 or 9 vis-a-vis e-way bills. Now the department has become online, technology savvy, e-way bill data are available with them. So they are capturing the figures of output tax liability reported in e-way bills and vis-a-vis what is reported in GSTR 1 or 9. So if there is a major difference, then they are issuing the notices for this. In near future, another category of notice can be issued about the e-invoices. So we should be very particular while in case of e-invoices that if there is a mistake in e-invoice, it should be properly regularized. What certain people do, suppose while preparing the GSTR 1 and vis-a-vis e-invoice data, there is a difference. So accountant will say on phone, okay, you delete all the data and put the data as correct. This is completely incorrect. And this raises the risk of professional responsibility on us. Because accountant will say, no, I have not sent an email to you. Okay. And the data is changed. So when the manual invoices are being uploaded, 64-digit number is not going in GSTR 2A of the counterparty, and that raises the risk of availability of ITC to the counterparty. So while preparing GSTR 1, now above 5 crore rupees, everyone is liable for the e-invoices. So we should properly see that what is the difference in e-invoice data and the books data, what are the errors are there that should be properly addressed, either through issue of fresh e-invoice or through issue of credit note in case some e-invoice is issued for the higher value. Then one point raised by the department is different in output tax liability payable and paid as per table 9 of GSTR 9. This is very important point. This we will take up. So GSTR 9 table 9, when we see, I will show the table here. This is the table, tax paid table. So the figures of tax paid is auto-populated and freezed. So we cannot edit these figures. Taxes paid in case and taxes paid through ITC. Now tax payable figures can be edited and changed. So these figures are also auto-populated, but these figures are table 4 plus table 10 minus table 11, whatever the tax is payable. So if there is a difference, say tax payable figures are higher than the taxes paid, then we should pay the differential tax liability through DRC 03. If the figures are lesser, then we can claim the refund. So mostly there should not be any difference. If there is a difference, then we should take a corrective action at the time of filing GSTR 9. We should not arbitrarily, okay, somebody has decided, okay, tax payable to itna aata hai, so arbitrarily somebody has changed the figures and later on we face the music. So we should be very careful while reporting the figures of tax payable in table 9. So these are the points about output tax liability. I hope everyone is clear about output tax liability, how to report and all these things. One important point about RCM, which I will take at the time of ITC. Now let us go for the ITC. Input tax credit is highly important and interesting point for everyone. Everyone is interested in input tax credit. And there are a lot of issues in input tax credit. Lot of gray areas, lot of point of discussions on input tax credit. But I will put the input tax credit matter in very simplified way here. My first point is through GSTR 9, neither you can avail any input tax credit nor you can reverse any input tax credit. If any input tax credit is availed higher, you just report the figures in table 7 and pay through DRC 03. If anyone has any confusion that can avail the ITC through the GSTR 9, they should review himself or herself that how can we avail, whether any entry goes in our electronic credit ledger through GSTR 9. I think no. So when the no entry goes in GSTR 9, electronic credit ledger through GSTR 9, there is no question of availing any input tax credit, reversing any input tax credit, availing any output tax liability, reversing any output tax liability. Output tax liability we have already discussed. If there is a increase in output tax liability, let us pay by DRC 03. And if there is a decrease in output tax liability, let us claim as a refund through RFD 01. So input tax credit, there are 5 tables in GSTR 9. Details of ITC availed during the financial year. Very clear heading. Details of ITC availed during the financial year. Then table 7, details of ITC reversed and ineligible ITC for the financial year. Let us first discuss these 2 tables. Then we will come to the, and we can put together table 12 and table 13. Reversal of ITC availed during previous financial year. ITC availed for the previous financial year, means in next financial year, GSTR 3B, if we have availed any ITC or we have reversed any ITC related to the year for which we are preparing the GSTR 9, then the figures can be reported in these 2 tables. These 2 tables are also optional. Table 8 is other ITC related information. This we will discuss in detail. So table 6 says details of ITC availed as declared in returns filed during the financial year. Again, very clear cut heading, returns filed during the financial year. 6A is the auto populated figures and it cannot be edited. So in 6A, the figures are coming from the GSTR 3B. 6B is ITC from the registered persons. There can be bifurcation, you can report bifurcated figures, but it is optional. Input services, capital goods. Then inward supplies received from unregistered person liable to reverse charge. RCM from the unregistered person. 6D is RCM from registered persons. Then 6 is import. In case of import, you see that these figures, columns for CGST, SGST is freezed because on import only the IGST is being charged. So in that also there are 2 categories. Import of goods means for inputs and capital goods. Import of services, again IGST. Input tax credit received from IST. IST distribution, if it is there, then amount of ITC reclaimed other than B above under provisions of the Act. So whatever the ITC was reversed earlier can be reclaimed here. So reclaimed ITC can be under Rule 37, or any ITC was reversed by error and later on we came to know no, this ITC was not to be reversed. So you can reclaim here. So then the total of B to H comes, and J is the difference between A and I. So ideally this difference would be 0. If there is a difference, then we have to give the explanation for this. And I recommend that we should give the explanation through explanatory note in GSTR 9C. Our turnover is of more than 5 crore rupees. If it is less than 5 crore rupees, then we cannot do anything. Tran 1 credit. Initially, it was there in 17-18. Last year also, there was a window for Tran 1 credit. So if any Tran 1 credit is availed and it is reflected in electronic credit ledger for the year, we need to report the figures here. And then any other ITC availed but not specified above. So whatever not specified above can be mentioned here. So one important point is ITC related to last financial year availed in this year can be reported here. Say we are preparing the GSTR 9 for 2022-23 and there is some ITC related to 21-22 which is availed in 22-23. So it is better to report here. What will be the benefit of this? Benefit of this will be in table 8. In table 8, the figures are coming from 6B plus 6H. So these figures will not come at all. So this difference can come, okay. You can make the difference of the last year ITC and then any other ITC. So the total will come ITC and total ITC will come. So total ITC in N will match with the 6A. So this is the ITC availment. Table 7 is for ITC reversal. So reversals are under these rules: 37, 39, 42, 43, 17, 5, Tran 1 and any other reversal. Now 37 is about creditors outstanding for more than 180 days. 39 related to ISB. Rule 42 exempt supplies on input and input services. Rule 43 is exempt supplies related to the capital goods. 17.5 block credit and other reversals. This is most important. Now say these figures have been come auto-populated from the GSTR 3B. These figures we are putting from our input tax credit register or our books of accounts. Now we have identified there is some mistake in our GSTR 3B return for the year. Say we have availed excess ITC or we have availed lesser ITC. These can be the two scenarios. So if we have availed excess ITC, that excess ITC is liable to be reversed. So reversal should be through 7H and we should make the payment through DRC 03. So the interest liability is freezed there. If there is ITC availed is less than what is we are eligible, and if the last date has gone, 30th November has gone, then you cannot do anything. Then what we need to do, 6 and that we will discuss in table 8. So 6 is clear. We need to figure the report the figures as per returns, and table 7 is as per returns plus if there is any error that will be reported in 7H, and based on that we will make the payment. Now let us see table 8. This is analysis and lot of confusions are prevailing. Department has thoughtfully designed this table to identify their own revenue. Table 8A is the GSTR 2A. These figures are freezed in GSTR 9, but GSTR 2A is dynamic statement. So the figures in GSTR 2A keeps on changing. So at the time of scrutiny notice or at the time of departmental audit, never the figures as per table 8A and table 2 GSTR 2A matches. Generally, in most of the cases, 99.5% cases, the ITC as per GSTR 2A is higher than table 8A. So table 8A is only for the purpose of reporting. This cannot be made as a benchmark for the assessment. Department though insist and refer on these figures, but there are number of issues. Why the figures are higher in GSTR 2A, that we will discuss. But first let us discuss table 8B. Figures are auto-populated from 6B plus 6H. 8C, whatever the ITC availed in next financial year. So now what figure we should report here? Whether we should report only the ITC availed in next year, or we should report the net figures ITC availed as well as ITC reversed. If it is transaction level, then in my mind it should be net figure. If the reversal is related to rule 37, Rule 39, 42, 43, then we can report the gross figures. Then the difference comes. So this 8D is the benchmark for departmental notices. If 8D is negative, department will issue the notice why this 8D is negative. Then lapsing of ITC. ITC available but not availed out of D means there were some ITC which was available to us, but we could not avail in GSTR 3B up to November of 30th November of next year. Then we need to lapse here. It will be of no use. But there are cases that someone has given the ITC credit in our GSTR 2A, which we do not know to whom who has given the credit. We do not know the vendor. Should we report those figures here? No. When we do not know the vendor can later on make any kind of changes in their books and in their returns. So it is better to reverse only those ITC which are known to us that yes, this ITC was related, it is related to us and we could not claim it. Then 8F is ITC available but ineligible ITC. Ineligible ITC, whatever is there in GSTR2A, say 17.5, or based on the place of supply. Place of supply ITC is what? That some vendor is located in Delhi and he has given us the credit of CGST and SGST. Generally, we will say, yes, this is my ITC, I will take this ITC. But you are registered in Maharashtra, the vendor of Delhi is giving you the CGST and SGST credit for a hotel stay. Because in case of hotel stay, based on section 12 of IGST Act, it is place of supply is the location of property. So there we cannot avail CGST and SGST in Maharashtra. So based on the place of supply, there are certain ineligible ITC which we need to reverse. Secondly, there are certain ineligible ITC, say under section 17.5. So 17.5 it is appearing in GSTR 2A, but that is not eligible. So this need to be reversed. So in table 8F, we need to reverse it. 8G, IGST paid on import of goods in supplies from SCG. This is just a reporting parameter, whatever the IGST is there on import of goods. IGST credit availed on import of goods, whatever you availed reported in GST table 6E will auto-populate here, and the difference should be 0. If there is a difference, we have to see why the difference is there. ITC available but not availed on import of goods equal to I. Means if the negative figure cannot come in table 8, only the positive figures will come. So if we could not avail any ITC of IGST, we have to lapse here. So K is the total ITC lapsed is E, F and J. So what the department will do on backend basis, backend that from our GSTR 2A, this much amount will be debited and credited to the revenue in their system. So these are the ITC which we are lapsing. We are admitting ourselves. Yes, this is ITC in my GSTR 2A, which is not for which I am not eligible. So this is to be lapsed. Now let us see the parameter 1, this GSTR 2A and 3B. This is seasoned. So in GSTR 2A, they are putting table 8A. So table 8A figures, as I told, it is freezed in GSTR 9 at some point of time, and then it never changes. And whereas in GSTR 2A, the figures keeps on changes. So whenever the department says that we should consider the figures as per GSTR 2A, we should not admit it. Now, department is asking the reconciliation between GSTR 2A and table 8A. For 17-18, the table 8A was not available. We cannot download. But from 18-19 onwards, we can download. So we can very much prepare the reconciliation between GSTR 2A and table 8A. Generally, the difference in GSTR 2A and 8A is the ITC related to vendors who have filed their returns late. So department again says Yes, he has filed the return late beyond time limit prescribed under section 16 subsection 4. So you are not eligible. And they quote the section 16(2), 4 conditions. Now the third condition is the vendor should file his return and pay the tax for the eligibility of ITC. This point is highly litigative and it will evolve in future that for availing the input tax credit, whether it is mandatory for me that my vendor should file their return in that month itself, or before I file my GSTR 3B, the vendor should file their GSTR 1 and 3B, and then only I can avail the input tax credit. So this point will evolve in the future, but my view is if the credit is reflected in our GSTR 2A, we are very much eligible to avail input tax credit. Section 16(4) is applicable for us. We should avail the input tax credit within the timeline stipulated under section 16(4). We do not have any control on our vendors. When do they file? If anyone is filing their returns late, they are liable for late fees as well as the interest. So the authorities cannot penalize for the same matter twice. Once to the person who has procured the goods and services and once to the vendor. So this is all about table 8. Then table 12 and 13 we have already discussed. Reversal of ITC availed during financial year and ITC availed for the previous financial year. This is very simple arithmetic exercise. You take the working for returns from April to say for 22-23 we are filing the annual return. So you take the returns GSTR 3B returns working from April 22-23 to October 2023, whatever the ITC related to 22-23 is availed or reversed is to be reported here. Nothing else is required to be done. Now some fellow members, some team members, some other peoples make their own logics. They prepare ITC reconciliation at the time of filing of annual return and says, yes, yeah, ITC छूट गया था, now I will take the ITC. So that is overriding to the legal provisions. So we should report the figures in these two tables from the GSTR 3B returns and there should be backup working. So at the time of assessment, we can very well justify the figures of these two tables. So these were the tables in GSTR 9C. 9C reconciliation statement, ITC, very important and very clear and simple statement. How much is ITC available as per books of accounts? If anyone has a single GSTIN in one state, for that, if anyone has the multiple GSTIN in different states, then GSTIN wise it has to be mentioned. Then ITC booked in earlier financial year claimed in current financial year, means of the earlier year claimed in this year. And next is ITC booked in current financial year claimed in subsequent financial year, means table 12 and 13 are coming into the picture here. And then the ITC as per ITC availed as per audited statement or books of accounts. So that will be the figures coming ITC availed in GSTR 3B and corresponding figures reported in GSTR 9. There should not be any reconciliation entry here. The figures in unreconciled will be 0. If there is an unreconciled figure, then we need to give a proper reason. If we are not able to give the proper reasons, then again our GSTR 9C is under screener for scrutiny or GST audit. And one important aspect, I have attended many investigation cases and I have observed that State Department is making the GSTR 9C as a criteria for investigation. Many cases are picked up for investigation based on the some abnormal figures appearing in GSTR 9 and 9C. Exempt turnover is shown high, very high, but ITC reversal is very minimal. So they are making this as one of the criteria. Then unreconciled figures are coming. Major unreconciled figures are coming in ITC in GSTR 9C. They are making this as a criteria. Or high figures, negative figures are coming 8D. They are making this as a criteria. So we should be thoughtful and mindful while preparing GSTR 9C. This is the last opportunity to rectify any mistake which we have committed during the year in filing GST returns. Then another reconciliation of ITC declared in annual return with ITC availed on expenses as per audited financial statements. This table has been mentioned in GSTR 9C, but it is optional. We can skip the figures subject wise and we give only the figures at the end and as per GSTR 9. So only the overall reconciliation is needed here. Reasons for reconciliation and will be given in table 50. Then tax payable on unreconciled difference in ITC due to reasons specified in 13 and 15. So how much is tax fees payable on these figures? Unreconciled ITC in 13 can be different than in table 50. Say in 13, the as per GSTR 3B is coming, and in 15, in 14, table 14, total amount of eligible ITC availed, ITC claimed in GSTR 9. So earlier year ITC is availed in this. So you are giving expenses wise detail. So there can be some difference here. So if tax is payable, then we need to mention. If tax is not payable, then we have to categorically mention no tax is payable here. So these are the tables of reconciliation related to input tax credit. Now, what do the department do about the input tax credit? Some points I have already discussed with you. Excess ITC claimed in GSTR 3B99, 3B9, which is not confirmed by GSTR 2A or 8A. This is the most important point. It is called as a para 73 by State Department in Maharashtra. Then ineligible ITC claimed from GSTR 3B non-filer. We should be careful while reviewing the GSTR 2A. If there is a column for GSTR 3B, if the counterparty has not filed their GSTR 3B, it means they are not satisfying the section 16(2)(c), and that is liable for that ITC will be categorized as ineligible by the department. Or RC cancelled suppliers. Some suppliers has filed their GSTR 3.1, 3B, but their RC is cancelled with retrospective effect due to the certain category of defaults or by the investigation authorities. So that supplier's ITC is not eligible. We should be mindful why we should review GSTR 2A. Carefully we should review. Remarks are coming in GSTR 2A, so that will help us. There is another category of vendors who are declared as NGTP, non-genuine taxpayers. Earlier, we used to call in MVAT the bogus parties. Here it is said non-genuine taxpayers. The taxpayers, though filing all returns, GSTR 1, 3B, making all compliances, but down the line, the ITC is not correct at some point of time. Department having good software, and through that up to 10 levels they are able to identify whether there is any bogus ITC availment. Though our vendor has not availed any bogus ITC. Next level party has also not availed the bogus party. But there is a chain of peoples who has structured these transactions, and based on their structuring, ultimately the ITC is coming to us. So department is making us accountable. So why we should suggest our clients that they should be careful while making transactions with any party. There are certain trade practices that some party is supplying the goods. He says, okay, I'm supplying the goods, but I will give the bill from my friend. No, he should give his own bill. Who knows who is his friend? We should know who is our supplier. Supplier on record is the person who has issued tax invoice to us. So this is one thing. Second, then next is the based on the HSN reported in GSTR 1, they are making the issuing the notice that these ITC are not eligible. Now, what are these ITCs? One is related to the construction services. Another is related to staff welfare and all these events. So certain state departments have picked up, say Telangana has picked up these based on the HSN, Daman has picked up based on the HSN, UP has picked up based on the HSN. So we should be careful, mindful while filing GSTR 9 that our GSTR, our ITC register contains proper these things. HSN code and ineligible ITC is reversed. In certain cases, department is also not correct. They are issuing the notices based on the general perception, whereas the reality is that the end use of the goods is different. Then excess ITC claimed of ISD in 3B. This is clerical mistakes in GSTR 3B. We are see the first year, second year, table 4A. 4 number column is for ISD ITC and 5 number column is all other ITC. हमारे जूनियर ने all other ITC को ISD ITC में डाल दिया. डिपार्टमेंट ने उसका एक इशू बना लिया कि आपने ISD ITC लिया है and 2A में दिख नहीं रहा है, so you need to make the payment. You have availed excess ITC. Whereas we should say it is regularized in GST annual return. So once it is regularized in GST annual return, this point no more exists. And even if it could not be regularized in GSTR 9 due to some clerical mistake. Still, it is a clerical mistake, and based on clerical mistake, the liability cannot be raised. But here the importance of GSTR 9 comes. If any mistake has been committed in GSTR 3B, say net figure of output tax liability, manual punchings are there in GSTR 3B, so some error has committed. So all those errors should be carefully regularized in GSTR 9. So we can say to the department, yes, there was mistake in GSTR 3B, but it is later on regularized in GSTR 9. So this mistake no longer exists and this point need to be closed in your records. Non-reversal of ITC in GSTR 3B compared to GSTR 9. This is also important point. I have discussed in the beginning that we should upload some explanatory statement. If we are reversing any ITC in GSTR 9 and it was not there in 3B for the year, department do not see the things in totality. They are simply issuing the notices. And even till 2-3 stage, they keep on arguing, okay, no, you are wrong. But then once they see carefully, they identify, yes, there is no liability arising. Whatever the reversal was applicable, it is already reversed through DRC 03 and no liability is required to be paid additionally. Then RCM liability disclosed in GSTR 3B, in GSTR 9 3B is lesser than shown by supplier in GSTR. This is important point. Some registered persons are reporting their output supplies in their GSTR 1, which is auto-populated in GSTR 2A of our company, which is RCM transaction. So first of all, we should be clear, it is not a ITC. It is just a reporting information in our GSTR 2A. Second thing, we should take care that whatever the reporting transaction has come, whether it is related to us, if it is not related to us, we should communicate with the vendor and ensure that they rectify their mistake. And if it is related to us, we should check whether it is reported in GSTR 3B. In some cases, department has identified the total figures of RCM ITC reported in liability reported in GSTR 9 is lesser than whatever the figure available in GSTR 2A. Then one point is excess RCM credit in GSTR 9, table 6 C and D versus liability in table 4G. This is most important. We are reporting the RCM liability in table 4G and we are availing the RCM ITC in table 4C and 4D. Now, when the RCM ITC is available, RCM ITC available on payment basis. So we are making the payment along with GSTR 3B. Some people take the credit in the same month return, some people take the credit in next month return. When we take the credit in our GSTR 3B return, we should ensure that total ITC figures should be equal to total liability reported in GSTR 4G, or it is less than that. If it is higher than that, say some people, what they do, they avail the ITC next month. So due to this 1 month gap, there can be higher. So appropriate window is to make a note and upload along with GSTR 9C. So when the department is raising this question, we can say, yes, see, I have already clarified this point in my submission. So all these points were about ITC. So I think ITC is clear. We cannot avail any ITC through GSTR 9. If any excess ITC was availed, we should report in table 7 and we should make the payment in through DRC 03. All other are just reporting figures, and we should be very careful while reporting the figures, because any incorrect reporting invites the issues. Then the third point is tax paid and payable. So output we have discussed, ITC we have discussed. The third point is tax. Output minus ITC is the tax payable. If we see the simple logic, but simple logic is not applicable in certain cases. ITC is higher in certain cases because in case of traders, manufacturers, they have the stock, or there are many other reasons due to which there is a accumulated ITC in electronic credit ledger of the registered products. Regarding taxes, in GSTR 9, there are two tables, table 9 and 14. 9 we have already discussed. The taxes paid are auto-populated and taxes payable are to be filled up by us. Means these are the editable figures, and we should be thoughtful while editing these figures. Table 14 is the differential tax paid on account of declaration in 10 and 11 above. It is clearly mentioned. Whatever the additional liability, net liability, we are reporting in table 10 minus 11, that only is to be reported here in table 14. Then GSTR 9C, taxes, reconciliation of rate-wise liability and amount payable thereon. Reason for unreconciled, additional amount payable but not paid due to reasons specified under table 6, 8 and 10. Okay, 6, 8 and 10 is related to output tax liabilities. So 9, details of tax paid. 9C, reconciliation of taxes paid. So here after 5, one entry is inserted for 6%. So 5 RCM, 12 RCM. So in between 6 and 6 RCM, 18, 28, 3, 2.25, 0.1 interest, late fees on all this. So whatever the tax is payable and whatever the figures are reported in GSTR 9, it should match. If there is an unreconciled figure, then we have to give the reasons here. Then additional amount payable but not paid. If any additional amount we are saying in GSTR 9 it is payable and it is not paid, then we have to mention here that taxable value. Okay, so these are about taxes. Then other information, part 6 is there in GSTR 9, which is optional. Particulars of demands and refunds. Supplies received from composition taxpayers deemed supply under section 143 goods on sent on approval basis. HSN wise summary of output and inward supplies. Late fee payable and paid. So these tables are generally not filled up by all of us, and it is advisable not to fill up these tables, because if we fill up these tables, say particulars of demands and refunds, then department will start raising the questions on this. So why should we invite the questions from the department? So this is all from my side. Now, if there are any questions, we can discuss. Senator? Any questions from the members? There are certain questions in chat box. Vishwajit Sarkar, whether ITC will be allowed based on table 8A of GSTR 9C. Table 8A of GSTR 9C. 8A is there in GSTR 9, not in 9C. So this I have already clarified that this is only indicating figures. The actual figures is to be taken from GSTR 2A. Then your next question is, kindly advise high C sales should be declared under which column of table 5? High C sales are exempt sales. So it should come in exempt sales. There is mismatch between turnover as per books and GSTR 9. Can we change the figures in GSTR 9 as per books? Yes, we should change the figures in GSTR 9. I have suggested one reconciliation statement. The reconciliation statement is between in GSTR 9, originally the figures are auto-populated from GSTR 1. So in GSTR 1, suppose certain turnovers which are appearing in our books is not reported, then obviously there will be mismatch. So that mismatch can be addressed in GSTR, should be addressed in GSTR 9. How to report ITC in table 6 and table 7, which are temporarily reversed in table 4B 2 of GSTR 3B after August 22 and reclaimed and reported in table 4D1 of GSTR 3B. When it was reclaimed, if it was reclaimed during the year itself, no action is needed. If it is reclaimed in next year, then you have to go to the table 12 and 13. Table 6, generally ITC as per GSTR 3P does not reflect ITC reversed in GSTR 3P. It shows only gross figures of ITC. In that case, how to show ITC reversed in GSTR 3B under table 6? Reversal comes in table 7, not in 6. So if you have reversed any ITC in GSTR 3B, which comes in 4B, A1 and 2, that comes into table 7. So it will not come in table 6. GST on advance receipt payable on supply, GST on advance receipt payable. Sorry, okay. There is mismatch between turnover as per books and GST, and this I have already addressed. GST on advance received payable on supply of service has been paid and shown correctly in GSTR 1 and 3B both. But while adjustment of the same advance GST paid against sale bill has been adjusted only in GSTR 1 and missed to get adjusted in GSTR 3B for financial year 22-23. So it was adjusted in GSTR 3B of next year. So now how to show this in table 4F of GSTR 9 of 22-23. You have to show the actual figures. Now, see, the point is, you are saying that the advance figures could not be reclaimed in the GSTR 3B. If it is reclaimed in April to October return up to 30th November, then you need not to do any action. If it is not reclaimed in April to October, then you have to file for the refund. Any other points? Interest from FD, 1 minute. This we will take. Can we avail ITC in annual return? I have categorically told no ITC can be claimed through annual return. Annual return is a reporting statement. I think I'm audible to everyone. My voice is little bit slow. So ITC can be claimed only through GSTR 3B. You cannot claim through GSTR 9, and it can be claimed only up to 30th November of next year. So GSTR 9 is only a reporting statement. How should we disclose the ITC reversed in table 4A and reclaim later, as the same might reflect as we have reclaimed excess ITC? See, if we have reversed the ITC in GSTR table 3B, 4C, 2 and reclaimed in the same financial year, you can change the figures. Okay, so it should show the correct picture, because reclaim the reversal figure do not go in table 6B. So we can rectify any mistake which is apparent in the GSTR 3B. In 21-22, one of the sale bill has GST payable of rupees 10, which has been correctly recorded in GSTR 1 of 21-22. But tax payable value of in GSTR 3B of 2021 has been mistakenly entered as 12 instead of 10. So there was excess GST paid of rupees 2 in financial year 21-22, which has been amended, reduced from outward tax payable in 3B of 22-23. So how to show this adjustment in GSTR 9 of 22-23, whether we have to show value of table 4 of GSTR 9 after reducing the value of the rupees 2. Yes, we have to match with our books. The output tax supply figures, we have to match with our books. Because the figures of tax payment in table 9 will be auto-populated. So tax payable and tax paid figures should match. This I have already addressed, 6 and 7, how to report the figures. Because, see, in totality, what we have to see that how much ITC we related to current year we have availed in GSTR 3B. GSTR 2A is for current year and table 6B is for current year. So how much ITC related to current year we have availed in GSTR 3B, that should be appearing in table 6B. So any ITC related to earlier year, we should show separately in last table. If there was any mistake in GSTR 3B, we can rectify it. Interest from FD and IT, TDS refund, how to? So in return, it is exempt supply. So it will be part of exempt supply. Way to show in annual return invoice for financial year 22, which has been shown in GSTR 1 for 23-24. Invoice of 22-23 you have reported in GSTR 1 of 23-24. See, basically, if you will show this invoice in 22-23 annual return, the differential tax liability will come, whereas the tax liability is already paid. So in my view, it is better to give through explanatory note this point that yes, there was some invoice which was related to 22-23, but it was reported in 23-24, and appropriate interest is also paid because it is reported late. So there you can give by through explanatory note rather than covering in GSTR 9. Or you can cover into GSTR 9, then give the appropriate note. Table 6 with example I already explained. In table 17 of the HS and Y's outward supply is optional, as last year it was required to be filled and uploaded. It is optional, still it is optional. Any other question which we should discuss?
Sajjan sir, I think
Yes.
all the major queries have been answered by you. Okay, so I'd like you I'd like to thank you for coming and answering and giving an insightful lecture on GSTR 9 and 9C. Your expertise and explanations have easily depreciated the complexities of GST compliance. Your commitment to sharing practical insights and addressing our queries have been extremely valuable. We especially thank you and all participants for their active engagement. And let's carry forward the knowledge gained because of your professional advisory. Okay, so thanks a lot thanks a lot, sir, from WIRC, WIRC of ICI, for coming and giving us time and your valuable suggestions with reference to GST compliance.
Thank you, Aditya.
Thank you. Take care. Have a good day, sir. Good night.
Thank you.